Pot stock prices are becoming more important as more companies are looking to merge and have that stock price be actually meaningful. So just being publicly traded, not as important. We're going to take a look at a graph from Viridian Capital Advisors with deals that were worth at least $25 million from U.S. cultivators and retail sectors that were buying other cultivation and retail companies. We're going to take a look at that coming up.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast.
So what you're looking at here is a percentage of mergers and acquisitions in the green line, and that's against a cannabis index in the orange line. Again, that's just U.S. cultivators buying up other cultivators for at least 25 million or more. Looking at a positive historical relationship between cannabis stock prices and the percentage of stocks used in M&A deals. You're hearing more about debt being used, but is that just because of FOMO and investors being, open to taking anything they can get? Before, just if you were publicly traded, that meant something, and then there's just a rush of speculation. Now actually stock prices mean something. And so as companies are looking for more accretive post-merger deals to help the stock price, assuming that means something to do with maybe fundamentals or overall interest and volume, and looking at that. So companies' currency increases in value, they want to use that for further transactions and keeping that momentum going. So black line on the graph is an upward trend for the percentage of stocks used in cultivation for mergers and acquisitions. Typically not a lot of companies wanted to touch the plant in the very beginning. Those were just OTC, unregulated kind of. Now you're obviously seeing a lot more companies want to be vertically integrated, and there's no backlash, and there's federal legalization, global legalization, inevitable, just a matter of when. And so you're going to see the money behind it, and that's exactly what we're seeing. So 70% plus figures shown between fourth quarter of 2021 and first quarter of 2022 are exactly what Viridian believes that what this emerging trend of higher stock components. So counterintuitive, maybe given the fact that cannabis stocks are now in multi-year lows, but that could just be because they're MOMO stocks, moving in momentum with federal legalization, not independent of their own fundamentals or even technicals for that matter. So Viridian has kind of laid this out for three reasons of why companies are starting to use stock more often. Number one is that targeted companies are increasingly looking at the stock merger consideration of an attractive investment. So rather than just being able to write off $1 billion or $3 billion that we've seen from Aurora and Canopy, they actually need this to be accretive and do something, because there's probably limited capital behind it. Like, do something or you're done. And so they're having to be very, very strategic rather than just the shotgun approach and cross their fingers and hope it works out. Another reason for the uptick in the amount of equity is you're seeing a lot of mega mergers. And that's kind of what we've been calling for a while, is merging because they don't know what else to do. Kind of Tilray didn't know, and Hexo wasn't, I think they kind of had some, I think they issued, I don't know, but it was probably about money, and they probably had some notes that were coming due and they didn't have a way out. So that's what I'm assuming. Otherwise, they would have just kept writing that out and they wouldn't have attached themselves to a zombie. But we are seeing mega mergers, and this is mostly all stock transactions, all stock deals. So both of them would rather just kind of work together rather than trying to crawl independently. Third reason for the use of stock is that you're seeing everybody get hammered. So even though one cannabis company's stock price might be lower, they can still use stock because the person they're buying stock is worth even less. There's a valuation gap between larger corporate companies and smaller companies, and obviously the valuation gap of a public company versus a non-public company. And so they're able to utilize that advantage of having a higher valuation, even though maybe a stock price is lower, because their overall market cap is higher. So demand is higher, and therefore able to utilize more share to gobble up more companies. So that's kind of what's happening, is you're going to start to see mega cannabis, and until the next wave of craft cannabis can come out of the ashes. Fourth component to people companies issuing more stock is that some of these smaller companies just kind of throwing their hands up, figuring that it's going to be more advantageous to combine with a larger company and get the economies of scale, lower cost of capital, and stupid money. Sometimes it's just hard to say no to that. And so if you have access to capital and it's cheaper and you're able to expand and do all of these things, a lot of these companies are tired. They're hustlers. They've been doing it for a while, and they just realize that maybe it's time to get some of that stupid money. They can reinvest it and keep going and doing something else. But sometimes it's hard to say no to that initially. It's also hard staring down some of the budget of some of the behemoth, MSOs. You can't really compete against that. So I've said, you're going to be a Larry's Handy Mart in a world of 7-Elevens. Kind of hard to envision that. So when the opportunity comes and they do present this, stupid amount of money, it's hard to say no to that. Unless you think you're going to have this legacy or, you're going to be able to compete. The reality is you're not, unless you have a solid product. And if you're just a retail company, you've got nothing except the location. So that's why I think you'll see more acquisitions, more mergers, and the industry kind of becoming more global and normalizing as you see the drumbeat of federal legalization. And Cookies has already taken advantage of that with international contracts and strategic partnerships and kind of paving that way for them to take advantage of a global brand. And those that are just kind of staying in one state, that's cool and all. Maybe a brewery can do that, but I'm not sure that a craft cannabis company will, because you have to, like, those guys don't, the brewery doesn't grow the hops themselves, right? They just brew it. So if you're going to be a producer, that's one thing. Processing it and selling it is another. So I'm not sure that that's going to work out for a lot of these companies, even though you might have a few hundred breweries in one area. I'm not sure it's going to be directly correlated because the product's got to come from somewhere. So it's an uphill battle nonetheless to find those craft growers and find that, those cultivars that you really want, because the big boys are definitely coming in. Big cannabis is here for sure, and that's going to create a competitive landscape, but it's going to come at a cost.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.